Now, Bitcoin and Ethereum have lost more than half their value this year, but that hasn't ceased interest among investors. The head of Ontario Securities Commission we just heard from also said yesterday that more than 30% of Canadians intend to buy crypto assets in the next year. And it's not just individuals who are interested. Canadian banks are getting ready to dip their toes in the sector, the pullback notwithstanding. For more on what crypto offerings they might be working on, we're joined by Michael Rabkin. He's the head of institutional sales at DV Chain. Thanks so much for being with us, Michael. It's your first time on with us, so maybe let's first educate viewers on what DV Chain is, DV Trading, because you're a fairly large, if not the largest liquidity provider and basically trader of these for institutions looking for liquidity.
Right. So DV Chain, we're a market maker and liquidity provider for one of the largest in the world for spot cryptocurrencies. We offer over 80 different assets, over 400 tradable pairs. We offer different user interfaces and APIs that our users can trade through. So essentially what we do is power and help businesses, scale their businesses. We help businesses scale their businesses in regards to what they want to do in cryptocurrencies.
So this brings us to the banks, because a lot of questions about whether the bear market in cryptocurrencies has diffused institutional appetite in crypto, whether it's on the trading side, funds wanting to own it, or whether it's on the product side. What are you seeing from the banks in terms of what they want to do with crypto offerings?
Yeah, so we've had, we're in a good position here in Canada where we've had the opportunity to speak with almost every bank over the last few months, and even prior to that. So I want to say go back 18, 24 months, banks were kind of getting into the space to get educated, to understand how they can participate. And now it's more of, hey, we need to be in the space. Whether it's over the next 12 months, over 24 months, those conversations are being had. So whether it's bringing a structured product to market or a direct offering, banks are having those conversations. And just to give it a little bit more color, what happened this year, we saw a huge market downturn in the crypto market, right? So war started in February. That led to the overall markets kind of coming off. Crypto in general, from an investor standpoint, is a risk-on asset.
Yeah.
And so from
Although
that
they kind of change what it is, depending on...
Right. From a thesis, it's not supposed to be.
Yes, that's right. It's not supposed to be, but it is.
In trading, if you look at the correlation of it to traditional markets, it's pretty high. So it kind of caused crypto markets to go down. Then May rolled around, and we saw the blow up of Three Arrows Capital, which kind of had a domino effect.
Yeah.
It led to certain lenders out there not being able to pay their obligations. In my opinion, they weren't managing their risk properly. And it led to kind of the downfall of many companies out there in the space.
So banks who see this, I don't know, our viewers know, Canadian banks are not known for going out there and taking on a lot of risk. So what kind of questions are you getting from these banks about wanting to be in the space, excuse me, but also not wanting a blow up on their hands?
For sure. It's more of, hey, we don't want just a product to come to market, but what is the risk that we're taking right now with certain protocols? Let's use Terra as an example, right? Terra was a blow up in May that caused Three Arrows to blow up. They want to do more research on what they can add and what will be acceptable to the Canadian consumer.
So do you think it'll start with the vanilla type of currencies, Bitcoin, Ethereum, or do they want to add some of the more, exotic type of currencies?
I think it'll start with some of the more vanilla options. Regulators are the most comfortable with that. They've done the most work around specifically Bitcoin and Ethereum. So you'll see banks probably rolling out, whether it's a structured product or direct placement, something around those two specifically.
Now, do they need to wait for some regulatory clarity, or does that already exist? I remember a few years ago interviewing Victor Dodig, the CEO of CIBC, and he despite U.S. bank CEOs, one in particular, often panning crypto, he was not, but he did say clearly, we operate in a regulated market, and so we will wait until there are more regulatory clarity. Are we there?
I think we are. Not fully, but if you look at Canada versus the U.S., we made strides over the U.S. We have, I think it's over 40 different structured products, spot products, whereas the U.S. doesn't have one. I think the biggest issue was a few years ago was custody. Who is going to take legal right of the asset, and when do they take legal right of the asset? And Canadian regulators have been very innovative to look at the whole landscape and see, all right, this is how we can actually provide these assets to consumers. Because Canadian consumers will still go out there and get crypto. It just depends if they're going to go through a Canadian company or they're going to turn on their VPN and go use Binance.
20 seconds left, but what's the kind of timeline you think the first time we could see Canadian banks rolling out a product?
Don't take me at my word, but I want to say within the next 12 months.
All right.